Hello, everyone. Matt Clark, research analyst for Money Markets here with the Bull and the Bear podcast. Remember, if you do have any comments or questions or stocks you'd like us to analyze, just email us at thebullandthebear@moneymarkets.com. Now let's get into today's podcast. In a podcast last week, I talked about the importance of momentum. If you remember, Chief Investment Strategist Adam O'Dell touts the line, buy high, sell higher. And I completely agree with him. Using the philosophy of buying high and selling higher, you're actually looking for stocks that are already in a confirmed uptrend, meaning they're already moving higher. You're not trying to guess where they're going to pop up. They're not lingering at the bottom and you think, well, it could maybe on Tuesday. No, you're already finding stocks that are moving forward in a confirmed uptrend. And so today what I want to do is I want to put that into practice and talk about two things. I see a trend coming in a particular sector of stocks that could prove to be a pretty big boom. And using Adam's philosophy and his six-factor green zone ranking system, I think I found a stock that could outperform the rest of the market by 3 times over the next 12 months. And I'm going to tell you about it. But first, I want to talk about the trend. At the end of October, investors were greeted with some pretty good news that the U.S. gross domestic product went up by more than 33%, and that beat analyst expectations. Now, GDP is basically the value of all the goods and services that are made in the U.S., and it's got a pretty tight tie to the economy, meaning the more value that U.S. goods and services have, the better the economy is. The less value, the worse off the economy is. However, you still have to put that in perspective and put some context into that, and this suggests that our GDP is still not at that pre-COVID-19 level yet. Because we lost so much in the second quarter, we're starting to make up some ground, and we made up a lot in the third quarter, but we're still not there yet. And the other thing to consider is that there are still millions of Americans that are without jobs, and any relief from the federal government seems to be fleeting at best right now. And that's even more precarious as we enter the traditional holiday shopping season. Pennies are going to be pinched across households around the country, to be sure. People are not going to stop shopping for either essential goods or presents or holiday gifts or whatnot. And this is where I see discount retailers coming into the fold. The trend that I noticed is in the last 2 years, these buy it cheaper stores have slow summer months regarding sales, and then that follows huge sales in November and December. And with the holiday shopping season right around the corner and millions of Americans looking to save as much money as they possibly can because the economy still has a lot of uncertainty, I think this retail trend is going to continue this year, and I think it's going to be even bigger. 2020 has been like really no other year we've been a part of. We've had a nationwide lockdown to halt the spread of the coronavirus. We've had an economic downturn that's pushed Americans to wonder just kind of how secure our economy is. We've had a contentious presidential election. In 2018 and 2019, when the economy was good, discount retailers saw their sales come close to $10 billion in November and around $12 billion in December. But as I said, these are different times. And I believe more and more Americans are going to be looking to save more money on holiday gifts as well as everyday household items. I think discount retail sales could hit $13 billion, if not more, in December. And that's going to be a big boom for discount retailers, especially the company I'm about to tell you about. This chain, it does more than just sell just cheap flower pots and kind of a random food and other sundries. Through their brick and mortar stores and their online stores, they sell furniture. They sell mattresses, they sell lawn and garden goods, they sell bedding, bath products, small appliances, cosmetics, electronics, jewelry, and a lot more. And they basically sell just about everything you would need for either your home or a holiday present. Now, this company's earnings report from August of 2020, the company said its sales jumped a record 31% quarter over quarter, while its adjusted earnings went through the roof. And after that report, its stock jumped nearly 20%. And it's just kept going. Since hitting a low of in March of 2020, the company's shares have climbed a massive 376%. Now, I know if you consider March when everyone tanked, 376% may not necessarily seem all that much, but it actually is. That's a big, big jump for any stock out there. And I really don't think this company's done yet. The company I'm talking about is Big Lots Incorporated. It trades on the New York Stock Exchange under the ticker BIG. While it's based in Columbus, Ohio, it operates 1,400 stores in 47 states, as well as has a really robust e-commerce platform. Now, let me break down some other numbers for you. Big Lots' current one-year annual earnings per share growth rate is a massive 494%. Its one-year annual sales growth rate is nearly 11%. In 1 year, its share price has exploded more than 134%. That's 12 months compared to the 44% growth rate for the general merchandise retail sector. So it's more than double, almost it's triple performing the sector that it's a part of. Its 52-week share price range is 108% better than the rest of the S&P 500. And I believe it still has room to grow. The high price target by Wall Street analysts for Big Lots is about $75 a share, and I believe that's feasible. It would be a 58% jump from its current price. It beats the rest of the general merchandise retail sector in price to ratios, return on investments, assets, and equity, and it has a very strong operating margin of nearly 6%. Now, I ran this stock through Adam's 6-factor green zone ranking system. Big Lots earns a 98 overall. That's impressive. That means that we are strong bullish on this stock, and we expect it to outperform the rest of the market by 3 times over the next 12 months. It also means that only 2% of all other stocks actually rate better than Big Lots. The company also has high scores in value, where it scores a perfect 100, which is very, very rare, by the way. It scores a 98 in quality, and it scores a 90 on growth. But what may be an important fact here is the company ranks a 95 on momentum. Now remember, Adam and I firmly believe that you buy high and you sell higher, basically the momentum principle. We already see Big Lots in a big uptrend, and with the holiday season upon us, that uptrend is only going to continue. That makes Big Lots a huge momentum play that will capitalize on the trend that millions of Americans will want to seek out deals for household items and holiday presents to save money. The only thing working against Big Lots is its size. It does have a market cap of nearly $2 billion, and it does have some volatility. But I think the reason the volatility is an issue is because on its climb to its record highs, it has sustained some very slight pullbacks. But those pullbacks have been short-lived, as you can see by their stock chart. The bottom line is that Big Lots has all the ingredients of a company set to outperform the overall market by 3x in the next 12 months. And it has the current momentum to thank for that. That's about all for me today. And remember, get ready for Adam's Momentum Masterclass. It's coming up in a few weeks. The team is putting together the final touches on it, and I'll let you know when it's ready to go and how you can sign up, and you can learn all about Adam's gain-producing approach towards buying stock. Now, make sure you check out our YouTube channel. Just head over to youtube.com. Make sure you type in Money and Markets in the search bar. You'll see a green bull and the bear. Just make sure you click that and subscribe, and then you'll get a notification bell. If you haven't already, click that notification bell. You get notified each and every time we release a new video. Also, the Bull and the Bear podcast is on your favorite podcast syndicators. We're all over the place now. We're on Apple Podcasts, Google Podcasts, Spotify, Amazon, iHeartRadio, and tons of others that I didn't even know existed. But we are out there, so find your favorite podcast syndicator, and you'll likely find us. And make sure you give us a listen. And we love reviews as well. Give us a review, give us a like, give us a follow. And any comments or whatnot, you can email us at thebullandthebear@moneymarkets.com, or if you're on our YouTube channel, you can leave a comment right below in the comments section. Also, head over to moneymarkets.com, sign up for our free daily e-letter. We put out an e-letter each and every day. It comes into your mailbox every morning. We give you safe and sound investment information that will help you bolster your profits. Coming up this week, Money and Markets contributor Charles Sizemore will join me, and we'll dive into a couple stocks, let you know where they are. I'm going to I'll give you a bit of a hint. They're probably going to be some momentum stocks. I'm just saying, but watch out for that. Until then, this is Money and Markets research analyst and host of the Bull and the Bear podcast, Matt Clark, wishing you all safe trading.